Satisfied, let us know and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to take a look at the U.S. dollar index, folks. I posted two charts this morning. The first one was done with the early morning video, and we were looking for the dollar index to get down to this 115.10 level, actually 115.26. The low happened to be at 115.15. It went below it by 10 pips, and we've rallied 100 pips already. Now, that 100 pips translates into more than 100 pips in the U.S. dollar versus the euro, and the U.S. dollar versus the British pound is down more than 200 pips off of the high. Now let me walk through what I was looking at that time, just to show you that even though the best laid plans of men sometimes don't work out the way you'd like to see them. But anyway, what we were watching here this morning was this particular 382 retracement that we were seeing here on the British pound. And this is where we were this morning. I wanted to get this up here to walk through this because you learn so much from your risks or from your mistakes as you do from your wins. But you'll notice here the 382 retracement off the low we made down here at 103 came in here right around 188. Okay, so it was setting right there, just absolutely spot on. You couldn't ask for anything better than that. Yes, you could. And let me show you what I was looking at. As we were watching this unfold here, you'll be able to see here, just one second if I can get it up here. And I think I can. Where is this thing? Okay, boys and girls, here it is. We've got it. There we go. And then you're going to see what happened post-haste, because this happened within, I'm not joking, folks, within 30 seconds of the time that I gave this order, sending it out on the video. And the videos were sent immediately. They're out there within a minute or so. You'll see that we were setting right there at that 188 level, and the report came out. And frankly, I did not know there was a report coming out. I would have waited. I know. Well, maybe I would have, maybe I wouldn't. Sometimes I do, sometimes I don't. Anyway, you can see here the market just exploded. We went all the way up to 2020, which was really a big move, and now we're trading back below that level right now. So that was a big move. The key point here is the importance of that dollar index, is how between all of these together, when you add them together, the dollar index stopped right at the 382 of the low we made last May. Now, if we go below that, look out, that dollar index is going to have one heck of a move to the downside. So that has not happened yet, but we're watching it very, very closely. That's a big thing. Along with that U.S. Treasury bonds, that we hit the exact 61% retracement of the October high down there up at the 125 level, and we've dropped a full handle from that level. So that's also very important. I wanted to walk through a couple of other trades that I thought were important. One was the E-mini S&P. We were in that trade. And it had a 30 handle profit, folks, and it ended up with a loss of 20 handles, which is it's acceptable, but it's not acceptable. Let's put it that way. I mean, to be that far ahead, but the problem was I didn't get this video thing working until early this morning. By then, it was all part of that history lesson that I sent out when that first video came out, because we were trading at break even at 39.90. And then just a few minutes later, I lowered the stop down real tight, and then the report came out, and of course it's exploded 60 handles higher. And but there's nothing you can do about it, folks. Hey, I'm sorry that you take a loss if you did, but boys and girls, let me tell you something. We've been bearish the stocks from January the 4th into October. Middle of October, we turned around. And also we've been bearish bonds since the three wise men were in Bethlehem. And that's been going for 2.5 years, and we missed that one on the upside too. But that's neither here nor there. I missed it by 15 pips. I can't do anything about it. And we missed the gold market to the upside by $0.50. Missed that one too. But I'm going to miss a lot of them. But you know what? We're going to get some too. So all I'm doing is I'm waiting to see the ones that look really, really good. And those are the ones that, make your mouth water. Now, those of you that, follow what we do each day, I want you to notice here, because I'm going to bring up this chart here on the crude oil. And this is one that, we send these out so you can take a look at it. You can see here we're coming into this really nice 1-3-5 pattern here today. And if you follow crude oil, which is one of the ones that I like to really follow, you're going to see that, by golly, maybe these things do have some things that give you a little bit of advantage. So you'll see here from the next chart that we're going to post here on the Christmas crude that you're looking at the market that has rallied a good $3,000 off of the low here at 83.96. We just hit 87 just a minute ago. That was a perfect, folks, 78% retracement of the low that we made right back here, and it was a 50% retracement of the low that we made right there. So you had double numbers in there. You had the 1-3-5 pattern acting just absolutely perfectly, and that lined it up pretty good. Now, another video that I sent out earlier this morning is when the S&P was trading at 40-30 level. We were making a beautiful 1-3-5 pattern. This was the upside version of this. And at 40-30, that had some really, really strong resistance there. We had the same thing, multiple numbers. We were in a lower downtrend. Now, I know the downtrend on the day was up strongly from the previous day, but intraday it was in a downtrend, because the high had been 40.65, 40.70, and now we were selling it around 40.30. And so that's what we're paying close attention to. Now it's trading at 40.11. And so that's a pretty good. Now look at the Dow Jones. It's now down on the day after having this tremendous run that we had. And now the British pound went back below the 382 level too. So we're having some pretty big volatility here. And that's what we really like to see when we're doing this. I just see the bonds just tipped off a 123 handle. So they're down well over a point from their level. So this is a pretty big day of things happening. We had the same thing happening in the gold market. If you looked at the gold market, it was really strong. Then it had the big break. It rallied to the 382. And what do you do at 382? You tip your hat and say, thank you, sir. And by golly, that one's worked too. So sometimes they work, sometimes they don't. I'm hoping, and I know that's a terrible trading word, but a technical word that's not so bad, is that these new videos will come out sooner rather than later. In fact, if you have a feedback, let me know, and I certainly want to make them get out there as quick as you can. I know they're really fast now because I've already had feedback that, wow, we are getting these quickly, so that will be helpful. The reason why they're helpful is because the market structure on these things changes, hour to hour. As you can see here today, huge move, up almost 80 handles in the S&P, and look where we are now. I mean, we're down 50 handles from the high. So these are huge moves, and, you can't take huge risks on some of these things because they're humongous. I mean, I know we were way ahead in the S&P at one time, and I was looking for a home run or at least a triple. I ended up getting thrown out at the plate, but that's neither here nor there. You got to move on to the next one. That's all there is to it. Not an easy thing to do, by the way. As Mark Douglas said, trading is simple.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I'm going to give you a little bit of history behind some of these things that I write about. The Opening Price book was actually done by Jim Sibbett and Earl Haddady of the Haddady-Sibbett Publications in Pasadena, California, circa around 1950 through 1976. It was about 1962 that they brought out this little 12-page pamphlet called The Opening Price. And basically they were saying, and this was just commodities, folks, this was nothing to do with stocks, but it was showing that the opening price in commodities was near the high or low of the day about 70% of the time. Now, over the years, we've had a huge change in all these things, especially with the SOS bandits when they came in the early 90s, 95, 96 with Harvey Houtkin, and they changed the method of bid and ask on the New York Stock Exchange and the NASDAQ exchange by going from quarter half to pennies. And boy, you'd think the specialists didn't like that very much at all, but they lived through it, and we made progress through that. But on top of that, what happened was we started trading 24/7 in some of these things and over extended hours, and that changed the opening price, because the opening price was always the ring of the bell at the Chicago Mercantile Board of Trade, whatever it happened to be, 9:30 in New York, 7 o'clock in Chicago, and that's the way it stood. So that's what this was about. Well, I had been a mentor. My mentor was John Hill, starting in 1970, and John was very interested in the opening price. Some of the stuff that he got from Jim Sibbett and Earl Haddady, who happened to be some of my mentors and friends of mine, and because across the office was Dave Nelson of Market Research and Oscar McClure, the two soybean traders that had me under their wing. So they were sort of a little family, and here they had this young guy from Terre Haute, Indiana, as a disciple or pupil, whatever you want to call it. So they gave me a lot of information. Well, later on, after I went through the time at Drexel Burnham and back into 1982, what happened was I became a member of the Chicago Mercantile Exchange in January of 1982. But in 1980, after the gold had topped, I had spent several weeks in North Carolina, Hendersonville, at the ranch with John Hill. I'd spend 2 weeks at a time. Several times I spent 2 weeks. And what we did is we started researching this opening price principle. Now, John Jr., John's oldest son, was a member. He had graduated from Duke University in commodities. Let's try it again, Larry. In computers. And so he had a lot of good computer information. You know, we had the data from the Chicago Mercantile Exchange that they had given me. Plus, we had all the New York Stock Exchange data that I got from Jim Robertson, who was a member of the New York Stock Exchange, and he would send this stuff out to us. So here's basically what we're looking at, folks. This was this happens to be stocks, and this is what little John Jr. programmed. What we would look for is the high or low of the day. And what we would do is we would have the computer. I just circled these to show you that you can see that the low of the day was right near the opening price. You see, so we go through each one of these. You go through all of these day after day after day till we got thousands of samples. Okay, then we ran them through the computer, and we found out that the opening price was indeed near the high or low of the day about 70% of the time. Now, that's a huge piece of information, folks, and it still works to this day. The problem is the opening is a little bit different. So what you have to do is you cannot use, well, you can, but if you're trading stocks, you can only use that opening bell at 9:30. That's the opening bell. Okay, now remember, it's only right about 70% of the time, but for day trading, my God, it's really fantastic. It's also good for one other factor, and that is it's really good for risk control. Because if you ask, let's say you're in a position today and you're, let's say you sold the S&P and now you got a big loss in it and you don't know what to do. Just look at the opening price. If you're above the opening price, the odds of you making any money on that trade is less than 30%. That's a huge figure, folks. So then you say, well, I better put a stop in or get out. That's all you have to do. Now, during the time that John Jr. was doing this, he met another young fellow from Chicago Board of Trade. He was a runner, basically, Toby Crable. And Toby Crable picked up this, just really, really quickly. And he decided to write a book called The Opening Price Book. And I think you can get it on the internet now for $1,200. If you want to spend $11.99, send me a check. It's the same thing that we're doing here at this little pamphlet that has got about the opening price principle book has got about 80 pages in it with examples and stuff. It's exactly the same thing. It comes from the same data source. And so he had a little stock trading fund. I don't know if it's still available or not, but he basically traded the opening price in stocks, and he was trading 100 and 200 stocks at a time using the opening price principle, and was making a nice return for his customers and did a really great job. I just think the price of $200 for that book, $1,200 for that book is a little steep, but what do I know? So anyway, those are just some of the things that I wanted to bring to your attention. So keep in mind when you're trading that opening price principle that's what you really have to do. Really, really simple. The opening price principle, I have it available on a PDF file. And if you want to give a $10 donation or $20 to somebody for Thanksgiving, I'm supporting the Thanksgiving program here, Sarah and I, giving food for the folks that are having a lot of trouble. And we didn't realize how many people are in trouble, folks. Usually we have about 12 to 20 bags that we have that we give to different families with giving all the fixings that they need, including a turkey and stuff. And this year it's just ballooned. It's up to about 50, which is good because we've got a group of people that help everybody out and everything, so it works out all right. But anyway, it's a good way of doing it. Remember, the opening price will help you if you're in the direction of the opening price. If you're long in the opening price and you're above the opening price, that's positive. Okay, if you're short and you're above the opening price, it's negative. It's that simple. If you're against the opening price, you're wrong. If it's in the positive side of the opening price, you're right. And you keep statistics on that, like I do, you're going to realize that you can do. That doesn't mean you can't trade against the opening price. You just have to be aware of it. That's the main thing, and believe me, I try to keep the risk as close as I can to the vest, but that doesn't always work out the way that you hoped that it would. So let's remind ourselves of that, okay? That's very, very important. Okay, now let's move on to we got a break coming up here pretty soon. Let's just see how our time on the old clock on the wall says here at TFNN, see how much time we have, which is about 45 seconds. And so coming up, what we're going to be talking about is a little bit of foreign exchange. I want to go through a couple of other of these foreign exchange markets like the euro and the Japanese yen so that you can see what they're doing also, because that number that we hit in the dollar index at 115.15 is a really important number, especially since we've come off well over 100 handles or 100 points 120 points in the euro and 300 points now in the pound. We'll be right back, boys and girls.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, in the last 20 minutes, we've had a heck of a move here. I wanted to point this out to you because this is what we were talking about in the E-mini S&P here, up around that 30 level. You'll see here, this was the 135 pattern. You know the symmetry that's here. There was your nice retracement here right at the 50% level of the high. 61% of 0.3, and you can see we've dropped a huge amount here. We dropped well over 40 handles. Let me see, 40. Oh, well, more than that, 60 handles down now, making new lows on the day. And the Dow Jones has just literally given up the ship and is down. It's the ship is sinking in the Dow Jones. It's broken more than 700 points off of the high today, folks. So that's a pretty big something big is going on today. Now I thought Monday was going to be a real key day, but unfortunately, it turned out to be Tuesday, and sometimes that happens, but that's neither here nor there. I started to see it happen a couple hours ago, but doesn't really mean much unless you happen to be involved in it, and I am not involved in it to any extent that I'd like for it to be, but I'm very close to getting involved in one of these right now, and I'm going to share with you because it's happening as we speak. And I'll get this up here, and we'll all look at it together, and we'll see how it works out. Remember, they only work part of the time, but you'll notice here, this is the gold market. There's your low right here for the day. You rally up, you pull down to a 61% retracement. You go up to exactly AB equals CD within 30 cents. Okay, and then the market breaks, and look what we're doing now. We're making a 382 retracement here. Is this going to be the high? I don't know. Would I take the trade? Sure. Would I put my stop above the 618? Absolutely. Because I don't know which ones are going to work and which ones aren't. But that's what we're watching here in the gold market, as we speak. And so we're keeping a really close eye on that one for sure. So let me move here to, I hope that, I don't know if we're on to the new segment or not. Are we? Oh, we are. We're still on. We're on the long segment now. Wow, where did the time go? Holy moly, guacamole. Okay, we've covered the gold. All right, the next one we want to cover here is the crude oil from yesterday. I've got to because someone asked me to review what we were looking at yesterday while we were on the air. And you'll notice here, this is the same thing that we were looking at here in the S&P just a little while ago. You see the 135 pattern right here? There's actually two of them. There's 135 right here, then there's 135 right there. This was exactly what we're looking at in the S&P. And we came right down here. This was right, there's where the exact 786 came in there at 83.96. The low was 83.94, I believe, or 4 or 5. It was within a penny. And now we've rallied all the way up to the 187 level. So that's why these patterns absolutely work. Now, I wanted to bring one other one up. I've got some teaching things that I wanted to go through this morning that were brought to my attention that I think some folks might be interested in. It's about the Gartley book itself. But okay, 1 second, boys and girls, just a minute. I've got to. Okay, go back just a little bit and catch my breath. I'm covering too much here too fast. Let's go back to the opening price stuff a little bit because this will give you an idea why it's important. Most actively traded stock in the world, I believe, is Apple. This is a bar chart. Now, as you're looking at this bar chart, you can see on the left-hand side there is the opening price. On the right-hand side is the closing price. That's the same thing you're seeing in the candles. The candles just done a little more, take a little bit more ink, but give you pretty much the same information. All you've got to do to prove that this stuff works is just follow this for a while. And you'll see there, you see where the opening price is near the high or low of the day. Now, sometimes it's right in the middle. Sometimes it's right on the low. We don't know. But if you go and look at this and just study it each day, day after day, after a while, you're going to say, yes, I can use the opening price. Maybe you can't use the opening price. Maybe your oscillators, moving average, stochastics, all that stuff works great for you. That's fine. This is a really simple tool that's used by a lot of people, and it's in those programs, believe it or not, for the these algorithmic trading people. It's in there. I can tell you that because I've watched it, watched those numbers hit like magic. And so watch it, though. But you'll see how many times the absolute low or the high. Look at this low right here, right on the opening. It makes it slow. And all you have to do is to figure that. Oh, wow. Holy cow. Let me move on here. My good friend Howard Arrington's coming into town tomorrow to see me. That's great. That'll be a lot of fun. Hold on here, and we'll get this up here. and take a quick look at it, what's going on. Anyway, that's pretty much what you want to be doing. And you can the easiest way is to get the chart and convert it to a bar chart, just a regular bar chart. Don't use candlesticks, because you can see it so easily, with the bar chart, that it makes it much, much easier to do that. If you have an interest. If you don't have an interest, real simple. Don't worry about it. Okay, just want a quick review here. I wanted to show you what we've had happen now in the British pound. Boy, I seem to pick big days to come up here, so we'll see what's going on. There's where we were early this morning when I started to put the trade on, and I did put the trade on there at 188, and was out of it very, very fast. Didn't risk very much, and we went all the way up to 120.20. Now we're below this level already, folks. So that's that's a real interesting one to pay very, very close attention to. I'm sorry, but the allergies are starting to get to me again. But hold on one second, and I will try to get this thing straightened up if I can, and we'll move on to the next one that I wanted to cover here, and that was I covered the gold, I covered the crude, I think the euro. Here's the euro. Here's where we are in the euro, and you can see here we've had a big move down here in the euro. Now, what's interesting now, remember now, you see the euro missed the 382 here by quite a bit. Okay, now this is a daily chart. Okay, and believe it or not, that's where the dollar index went to, that 382, because it's the upside down version of that. Now that's telling me that the euro is actually weaker than it should be, because it should have gotten up here to this 382 level, and it actually didn't. It completed the larger A, B, C, D. It certainly did that, and it's given up 140 points already. That's well over $1,400. And so there's some serious selling that came in here. You can see this is definitely a hanging man candle that we're having so far today. So that's going to be a real interesting one to pay close attention to too. So I hope some of this stuff is helpful to you, because these are some of the things that I've learned over the years that I think are important, and I still use them to this day the best I can. Sometimes better than others, but most of the time, I'm not going to be there at the finish line all the time, but I'm going to be there a lot of the time, and that's what this whole game is all about. So we do know that something really dramatic has happened today, folks, because we've had a 700-point move in the Dow Jones. I don't know if it's still going down, and I'll take a quick look at it here. Wow, the gold just went up quite a bit there. Went through my 79, and stopped me out of that one. I lost a quick $4 in that gold because I sold it at 17.79, and I just saw my fill here at 17.74. So I lost my $5 on the gold. 786 is up there at 17.87, but that's neither here nor there. Okay, we'll be right back. 877-927-6648.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
We have Mike from Coeur d'Alene, Idaho on the line.
Hey, Larry. Good morning.
What can I do for you?
Well, first of all, happy Bear Down Arizona Wildcat greetings from Idaho.
Well, we beat UCLA. That's a good thing.
I enjoyed my 4 years in Tucson. And wanted to just quickly, first of all, say I hope you live to be old, well, beyond 100 years old, because we love your advice. So keep going. Stay strong.
Well, thank you very much.
I'd love to tell you about the Fibonacci lines yesterday. You had mentioned on the S&P that we made a 0.382 on that January to October move. We came back up, and I was kind of wondering, is there any way to make sense of whether or not the 0.382 is going to be the end, or are we going to go to 50, or the 0.618? It's is it all just kind of a wait and see, or is there a way to kind of a pattern that makes us think, okay, we're more likely to go to a 0.618 and just keep going? Because when I woke up this morning and I saw everything was up, well, there we go. Maybe we're going to the 50% retracement instead of the 0.382. What are your thoughts?
Well, there is no way, Mike. I'm afraid to tell you this, but 382 followed by 51, followed by 61, 78%. Only if you have everything lined up, and even then, it doesn't work. It only works about 60% of the time. So you've got to get ready to just accept that. I know it's difficult because, I had this thing set up. I had a 30-handle lead in that thing coming in here this morning. And by golly, I saw, here we got a report coming in. So I said, I better lower the stop down because this could be another big surprise report that people believe. Whether they believe them or not, I don't know. But there is no answer to that, Mike. There really isn't. It's a combination of patterns and geometry, and you take your best shot. You're going to be right about 6 out of 10 times. You're going to break even a couple times. You're going to lose 3 times. That's basically it.
It makes sense. It just helps you anticipate reversals. It's not obviously, like you said, not an exact science, but it does help anticipate maybe a reversal. That's all I was curious about.
Yeah, we know that it's
So-
non-random, and we know that it's a repeat. That's all we need to do to get it to work.
Sounds good. Well, happy holidays to you.
Hey,
and
thank
your
you so
family,
much
and
for the
thanks
kind
for all you
words.
do.
And yes, I live up here in the foothills, and I love Tucson, and I've been here 30 years, and really enjoy it very, very much. So I've been very, very fortunate. So I've been pretty lucky. But thank you so much. You ever get down this way, come in, and we will have lunch.
I would love that, and I'll let you know. Thanks.
Thank you so much, Mike. Stay warm up there, and it's probably snowing already, so be safe.
There's snow on the ground. Thanks.
Okay. Hey, we've got a real
Bye.
special
Yep.
guest now. Santa Claus has entered the room, folks. Mr. Z from Philly. What happened to the Eagles yesterday, Bubba?
Well,
they got stopped
Lady
out.
Luck wasn't on their side, I'm afraid.
Oh,
But,
my gosh. I know. I was watching the game because my grandkids watch it, and I said, oh, how could that guy fumble running in for a touchdown?
Well, you just let you know, you just let your friends from Houston know that I've got their payday win to send to them, so don't let them forget that.
Okay, you got it. What can I help you with, buddy?
I wanted to ask you, please, about crude oil.
Yes.
I'd ask you if you could to put up either your daily or your 4-hour chart and share with us what you think to be the multi-day trend. Do you think we've bottomed and now are stair-stepping higher? Do you think that these are just highs that will fail, that will give way to lower lows? I'd just be interested in your perspective on that, please.
Well, John, to me, it's really quite apparent. Today we made a low of this move down from that 382 retracement, came right down to the 78% level. I posted in the room here, and it hit it exactly. 84 was a number, I believe, and it went to 83, 93, something like that, and we've rallied 3.5 handles already. So that tells us that bottom is in. If we ever break that bottom now below 84, then we're going to head down big time, because up until you can see that big 3.8 double 382 that we've had here hit it twice at 92, and from 92 we went down to 84. We dropped 8 handles, and now we're already got 4 of those handles back. So that's telling us it's got a little movement to the upside. It might be related to the fact that the 100 missiles hit, someplace in Ukraine today from the Russian forces, but I don't know if that's the case or not. But it's reacting to something, that's for sure.
In other words, you're thinking we're likely stair-stepping higher to go retest that double high up at that Fibonacci 382 level. Is that what I hear you're saying?
Oh yeah, I think we're gonna do that. If you look at it really closely, John, you've got a beautiful head and shoulders pattern here. Going back to September and then down into late October, and then where we are right now, that's a perfect head and shoulders coming in at a 61% retracement with a 135 pattern. Boy, that's really strong support. So that's why it looks pretty interesting to me.
Very good. And that being the case, Larry, just your view, would you be looking for short-term small pullbacks to buy to play for that sort of outcome?
First I look for is the 382. We've moved 3.5 handles, so one handle back will be almost $1 a barrel, which $1 a barrel in that market is nothing. So I'll be watching for a 382 in that. I'll be covering that in the video tonight, and to tell the folks keep a close eye on that, because especially if you get it in conjunction with a nice little ABCD, much like we did in gold. Didn't get filled in gold, but it happened. But anyway, we will be watching that one the same way, watching for a 382 with or without an ABCD, because that usually you'll get one more chance at the 382, and you've got to be ready for it, and that's what I'd be watching.
I appreciate that, Larry. I'm going to throw one last question out to you, kind of out of left field. I'm looking right now at the hourly chart on December silver, and noticed intraday, actually it was last night sometime, that we got up close to 22.40. We came all the way back to 21.45 intraday today.
Wow.
Is that a deep enough setback to try a buy on that as you see it, please?
Boy, I tell you, $1 an ounce in silver is a lot, but anymore these markets are jumping around so much. I'm bullish silver and gold, so I take it. I like it actually. I like silver and gold, John, long term.
Thanks a bunch, Larry.
You bet, John. We'll be right back with John from Philly some other day, but right now we're going to take a break. Thanks, John, for calling in. Appreciate it.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I'll put up a 30-minute chart here over the last 10 days or so. In the Dow Jones, you can see the ABCD here with this massive triple top up in here. Today. Now we've rolled down. Now the key to watch now is to watch for a 382 retracement down here. It's going to be a couple hundred points lower, but watch that because that's going to be a sign that should be pretty good support. Remember from Andrew Lowe's book, these have a tendency to repeat. So that range right here would be repeating right here, and that's the channel line. So there's where it's going to be holding up. Right about that level, So keep a close eye on that because that comes in at 33,200. Because if that doesn't hold it, and we're trading at 32,468. So we're 250 points away. So if you get down more than 300 or 400 points in the next day or so, today, maybe tomorrow, I don't know, we get below 33,000, that's going to tell us that, there's a big correction that started sometime today. Remember, our key day was for yesterday, but it looks like it's coming in for today, but that's neither here nor there. So pay very, very close attention to that. I think it's important to look at these in context of, like, the gold trade just didn't work, folks. I mean, I put that thing on, I lost $5 pretty good. I was up, I'd already made $8 in it on the run anyway, so that's pretty much what it's in. Just in the last few minutes, folks, we've rallied 30 handles in the S&P. We went from 60 to 90, for heaven's sake. So you think these markets aren't jumping around? Holy moly guacamole. So let's remember, folks, if you don't use stops, you're going to be stopped because they're going to not let you trade once you lose all your money. We already know that. And if you don't use a stop, you're telling Mrs. Market that, gee, I know where you're going. I don't have to use a stop because I'm smarter than you are. And we know the answer to that one. Judge's ruling, not going to happen. So live every day in an attitude of gratitude, and may God bless. And stay tuned tomorrow. Going to have some new stuff, and hopefully you'll enjoy it. And live every day with an attitude of gratitude, and may God bless.